Hello fellow traders and welcome back. My name is Sylvie Lagruta, I'm from the Technical Analysis Institute, and today we're going to dive deep into one of the most powerful and effective trading tools, the MACD. But not just any MACD strategy, today we're exploring MACD hooks, a favorite of my father's and certainly a strategy that many would consider to be the only one you really need. So whether you're a beginner in technical analysis or you're an experienced trader looking to refine your approach, this comprehensive guide is designed to elevate your trading game. I wouldn't be surprised if many of you experience your best trades yet whilst implementing this strategy. So let's go unlock the power of the MACD hooks and elevate our trading game. Let's go.
I always say that the hook is the only trade signal you will ever need. A hook occurs when the MACD line briefly penetrates or attempts to penetrate the signal line and then reverses. This is an hourly chart of crude where you can see 4 clear examples of hooks and how effective they can be. Hook 1 occurred 4 bars before a big gap to the upside. Notice how the MACD line attempted to penetrate the signal line but reversed, forming the hook. This hook is particularly significant because it clearly illustrates an ideal MACD setup. Let me explain better. You may recall that the basic buy signal is the crossover of the MACD line over the signal line. We have explained how a buy signal is most optimal when the market is oversold. At the same time, the concept of oversold for the indicator is not very precise because it depends on the distance that the MACD lines travel away from the zero line plus the distance separating the slow and the fast lines. Another way to consider an oversold condition is by applying the MACD capabilities as an oscillator using historical areas where the indicator has previously turned. In this particular case, you can see that based on the concept of distance from the zero line, the market was not oversold. The two lines were relatively close to the zero line, but if you observe carefully, you'll notice that the signal came at the same area MACD had turned back previously. So the first buy signal given by the MACD crossover would have been a valid signal. However, the hook occurring right after the crossover was a bullish confirmation that the signal was reliable, and that gives the trader an opportunity to add to the position. Hooks that appear right after a crossover work as confirmation of a trend change and are indeed ideal entries. Hook number 2 is another great example of how fabulous the hooks are. Notice how the crossover signal had occurred several bars before. The indicator in this instance was clearly overbought, relatively far away from the zero line, and with the fast and slow lines also separated from each other. At that point, the MACD line crossed below the signal line, but prices continue moving higher. Selling at that point would have been a loss. The histogram was also going lower as prices were going higher, but we have already established that that is not considered a valid divergence. I just pointed out so you can see the dangers of trading with MACD without the important tweaks you are learning in this course. All in all, the crossover signal would have indeed justified a sell, according to the orthodox rules for MACD trading. But as you already know, we favor the hook signals, and for good reason. Notice how the MACD line attempted to penetrate the signal line and failed, thereby forming a hook. Selling at that point with a protective stop above the latest high would have ended up in a perfect trade. The third one, in this particular example, was yet a better signal that resulted in a huge winning signal. The reason why it was better is because once the trend is established, the hooks act as confirmation of the trend. That's the reason why MACD hooks correspond to second and fourth waves within the 5-wave structures of Elliott. The fourth hook occurred after the MACD line had penetrated the zero line, making this hook the most profitable one of them all.
Hello, it's Sidi again. Just a quick pause for something incredible. If you are serious about mastering technical analysis, then don't miss out on our Technical Analysis Mastery 114-day course. It is an absolute transformative journey for any trader. Interested? Then click on the link below for further details. Also, if this lesson has added any value to your trading knowledge, let us know in the comments below and share some love by clicking on the thumbs up button. More importantly, don't miss out on any future expert insights and subscribe to our channel. Let's continue.
Personally, I like adding another timing indicator to confirm the hooks. So I add our top indicator. Let me show you why. Observe what happens when we add the top indicator to the price. I added blue vertical lines where the hooks were. Notice how the first hook was confirmed by the top indicator that turned all green, and it was a major winner. The second signal was also confirmed by the indicator, and it was also a winning signal, albeit small. The third and fourth signal were also confirmed by the top indicator. I also added to the chart two more vertical lines in red where the MACD gave us crossover sell signals. As we mentioned earlier, the first crossover sell signal, even though it happened as the market was overbought, was a loser. But look at the top indicator. Not only it didn't confirm the selling, in fact, the top indicator was giving us a buy signal. Compare that to the second crossover sell signal where the second red vertical line is. That signal was indeed confirmed by the top Indy, and the result was a major decline. That is the amazing power of knowing how to interpret MACD signals correctly and stack evidence in your favor with a valuable timing indicator such as top. The result of all these you may not notice at first, but progressively your levels of confidence will be increasing exponentially. Trading MACD hooks do not require the use of the dual frame top strategy. So if you have been thinking of moving from smaller time frames to larger ones, from scalping to swing trading, MACD strategies, especially the hooks, combined with a top indicator may be the safest way for you to start. But the setup works also as scalping strategy. The examples I have shown you are in an hourly chart, but the same setups occur in all time frames. Here is a 2-minute crude oil chart where you can see 4 hooks, all profitable when combined with the top Indy. Now it's your turn. Start looking for MACD hooks in your charts using different time frames. Then try to identify hooks in real time. If you know how to count waves, see if you can associate these hooks with waves 2 and 4 of different degrees. Hooks are one of the most reliable trade signals you will ever encounter, so try to master them before you move on to the next lesson. Remember, hooks may be the only trade signal you'll ever need.